regulations and compliance, which I know is a bit of an unusual topic, perhaps, in the Monero community. But ironically, a lot of people that I speak to in the Monero community are also among the most informed when it comes to regulations and compliance, because they just care so deeply about staying informed, seeing what people are doing, and making sure that they are advocating for things that they find very. Make sure the cryptocurrency space is a representation of what they want to see in the world. So I have a really wonderful panel on with me today. I have Carol Van Cleef, who is a counsel at Bradley. I'm going to have Liat Shetret, who's the Director of Regulatory Affairs at Solidus Labs. I'm going to let you two introduce yourselves briefly, just let the audience be familiar with yourselves. I'm Justin, your host. I am VP of Operations at Cake Wallet, which is not a regulated entity, thank goodness, but I have worked in the cryptocurrency compliance space for a few years, and I try to be on top of things, especially as they relate to anti-money laundering laws. So Carol, can you give a quick introduction to the audience, please?
Okay, hi. I'm getting a phone call as I'm talking by my dinner date who's waiting for me. What am I doing? Yeah, go ahead.
Hi, everyone. Good evening. I'm jumping in. I'm Liat Shetret. I'm Director of Regulatory Affairs and Compliance at Solidus Labs, which does trade surveillance for off-chain data. So essentially order books that are being digested, and then anomalies identified for market abuse, market manipulation, spoofing, layering, and so on. I am formerly with a crowd favorite blockchain analytics company, Elliptic, for a few years, and have spent about 15 years in the Horn of Africa working on anti-money laundering, chasing illicit cash. Happy to chat about that, but mostly just happy to be here and part of our discussion.
Awesome. Well, thank you so much. While we're waiting for Carol to come back, I have an initial question to ask, which just sets a state of how blockchains are really transparent right now. We know that Bitcoin, Ethereum, really every other blockchain out there records very public data about the sender, receiver, and amount in a very decipherable format for really anybody to peruse through, whether it is a US regulator, whether it's your neighbor or China or whoever it might be. Can you give a quick in your opinion, do you think that broadly ledgers that people use to transact should be public data for anyone to look at? Do you think that that is a good design decision for Bitcoin, or do you think that it has some problems overall?
I'll take this first. So no, I think there should be nuance there, and I think that's part of the conversation that needs to be had. It's complex, it's sophisticated, but we need to be talking about these things. But my main answer is no.
All right, Carol, thank you for rejoining us. Sorry about that. Can you give a quick intro, and then you're welcome to answer the same question about transparent blockchains and the design of them.
Okay, so I've been in and around the world of digital assets before Bitcoin. I represented the founders of a gold-backed digital currency system called eGold that got prosecuted by the US government in 2007, 2008 time period, and then decided to sort of reiterate after pleading guilty, having really some very interesting case law out there. Not that we're getting into a technical legal discussion, but there's a lot to still learn from the eGold case, including the fact that, it was really the first real system that was operating like this. So I've been doing a little bit of everything in this space, including some projects that are touching upon Monero as well. So shall I answer the question?
Yes,
now?
the question.
So transparency, is that the issue?
Correct. So Bitcoin has a pretty transparent design decision with how it's implemented. I guess whether it's a decision or not is it's for debate, of course. But do you think that it's sensible for cryptocurrency transactions to have this level of transparency for people's regular peer-to-peer payments, or do you think that there is it's potentially a problematic design decision?
I go at this from a very different perspective and say, what is it that policymakers and the government need, and why do they need it? And primarily, the need for transparency comes from the need to basically prevent criminal activity from happening. whether it's terrorists, collecting funds to spend on an event, or for other types of criminal activity. So that's really sort of where all of this started with respect to transparency. I think we got lucky that, or I should say the government got lucky that Bitcoin and Ethereum are relatively transparent, and that's really a relative term there. I don't think it has to be transparent, but let's put it this way: the government's going to find a way to get at the information they need to. So you have to decide whether making it transparent is something that has to happen.
Okay. I think we'll dive into that later. I want to quickly start, though, by asking another question, just as relates to different jurisdictions that people use to transact. So Monero has been delisted from many exchanges in the United States, in other countries as well, for example, in the United States and Australia.
Sorry about that.
And ultimately, I think it comes from fears that people might use Monero for illicit activities. But of course, my fear, as it relates to preventing money laundering and terrorist financing, is that you are pushing a lot of Monero-related activity to non-cooperative jurisdictions. So people who would have traded within the United States regulated exchange, for example, will use the next option available, which is in some country that might not be sharing nearly as much information with the United States, or is certainly on worse terms with the United States for sharing that information, and even if it's in a less automated fashion. So as a result, the United States might get less investigative information from these users. So my question is, what should the United States' response be to all this Monero and other cryptocurrency exchange activity moving to non-cooperative jurisdictions, and what, if any, should be the United States' response to this? And I'll have Carol address that first.
I'm going to start by saying the US government has not prohibited exchanges or anyone from accepting using Monero. That's I think, a fundamental point that's important to make. The reason that you find banks and exchanges not wanting to deal with whether it's a customer that's in Monero or a customer that's using Monero on an exchange is because the exchange, they've basically said, look, if you're going to deal with someone, you need to understand who that person is and what they're doing in their transaction. And the lack of transparency then becomes the issue because there's not a cost-effective, now I'm laterally it straight to you, on the cost-effectiveness of monitoring. How do you monitor these transactions? Is there a way you can monitor these transactions that would provide the government with the same level of assurances and basically keep those entities from getting into trouble? So
I'm with you, but to what extent is this sort of a made-up problem, though? Because I know that for specific ACH wire transfers, electronic transfers between banks, for example, other regulated MSBs, there was always a requirement to pass information along, collect information for customers. But as it relates to cash deposits, cash collection, I understand that some customers who would frequently have cash deposits, for example, would be higher risk customers in general. But to what extent are we saying, well, there's no blockchain analysis tool? Is that like a sort of a new problem that we've sort of invented in the compliance space, that like there is no blockchain, for example, for cash transactions?
He's asking some very interesting questions here that take a little bit of unpacking. But essentially, in the traditional financial system, we've got a set of laws and regulations that have been developed over time to get at, or to try to get at, the data that's wanted, that the government wants and needs. And we're really talking about anti-money laundering and terrorist financing. I think that the issue that we're dealing with is that that system is not perfect by any means. And we saw a bank get hit with $140 million enforcement action for not having good controls in place just a few weeks ago. And it keeps happening, even though they've been at it for 20 plus years now doing it. So just to make that kind of a comment about sort of the current system and compare it to the system now, I think what they've gotten sort of spoiled with, but they also want to head off at the pass, is the fact that they have some rules that they can work with, and they know how they can at least prosecute somebody who's doing something that they find out later that's wrong. But they want to create a trail, And the question is, how do they do it? And that's why I think we've seen some of the panic, because they don't necessarily understand the technology and how to get at it other than through a tool that might be available.
Okay, I appreciate that, Leah.
So I'd love to jump in on this just to say that before we sort of unpack the Monero question and the Monero operations within sort of the regulatory ecosystem, I think it's really important to mention that, you know, the 20+ year banking system, that's been ineffective. Look at the money laundering, the billions, the dollars, you know, the siphoned off, all this. I mean, that's not working, one. And then you've got this new asset class with the cryptos that have come in. And I think regulators are really in an uphill battle with the learning curve that just, you know, forget Monero, just crypto generally. What does this mean? It's exploded onto the global stage, and it's really posing a lot of important questions beyond traceability, but around identity. How do you reconcile offline and online identities and personas? How do you move money across borders seamlessly, cost effectively? How do you protect against fraud, rug pulls, and all these AML considerations, sanctions, terrorism financing concerns? So I think what you mentioned earlier really strikes me is that the Monero community is very well informed, and I think almost informed to the point where the conversations haven't yet gotten to this level of nuance to discuss, well, what do we do with privacy enhanced technologies? It's almost like, hey, there's this technology issue happening, but we're trying to run ahead into the privacy component. So my bottom line would be, you asked about the US specifically, is that the design of our financial system as the US, as any country, should reflect the values of that particular jurisdiction, so that we would have the freedom to move to a jurisdiction that reflects my beliefs on freedoms and privacies and concepts. You know, if I wanted a particular lifestyle, I would move to China. If I wanted a different kind of lifestyle, I would move to Australia, US, and so on. There is a responsibility from the US perspective to, you know, as sort of a major player, major influencer, major enforcer, reaching, you know, arms into other jurisdictions, thinking about the settlement of the dollar and so on, to set a course on privacy enhanced technologies that is responsibly regulating innovatively, trying to reconcile the traceability components, the identity issues, the risk mitigation, the sanctions controls, the money laundering controls, and the pace has been so rapid. What we're seeing now is this almost like hybrid response. So it's like a knee-jerk reaction before everybody has, you know, pie in the sky time to think about, well, what about Monero again? So it's a much bigger conversation, an important one.
So if I can follow on and okay, it's one of those nights. Something wrong. A lot of very good points here, and this reminds me of our dinner conversation last night, where probably a few of you at least are aware of Elizabeth Warren, the senator, who has definitely made it her thing to go after crypto. And the point I was trying to make over dinner last night is that you have to understand where she's coming from, is that this is a woman who's worked for many, many years to put a lot of controls in place. Now, not actually on the AML side, but more on the consumer protection and privacy side, but put controls in place to help people. And understanding why, so back to your value systems, why we have those laws and regulations in place is an important starting place in this conversation, because we really have had the crypto community and a lot of policymakers going like this. And it sort of time's up on that one. And we've got to start having that conversation together.
And just tangentially related, I would say too that, you know, my basic premise on the regulatory conversation is that good fences make good neighbors. And we really need to have some mechanism, which, as you said, you know, is sort of where Elizabeth Warren and others are coming from. What are the rules of the game? What's the regulatory perimeter? What is acceptable in one jurisdiction versus another? But more importantly, in a globalized world, in a digital world, how does that sharing of information facilitate trust and financial integrity and market integrity globally? And I think, you know, trying to achieve that while balancing for privacy issues and other issues is just sort of it's a crazy wild game that everybody now is trying to weigh in on and influence and has an agenda on.
Okay, awesome. I'm glad you mentioned the fact that the different countries will implement things differently. I'm going to move on to a question we talked about earlier. as it relates to each country coming up with its own way to cover like their definition of money transmission. Because if you look at the FATF's recommendations, they specifically gave, to some extent, a blank check in terms of allowing countries or recommending to countries the ability to impose pretty oppressive measures as it relates to restricting cryptocurrency transactions. Going up to the point of saying that it was an unreasonable control, for example, assuming other controls were not in place, to prohibit peer-to-peer transactions as something that would potentially recommend to other jurisdictions. So to what extent, especially as it relates to the US, should people be worried about the expanded definition of VASPs, or virtual asset service provider, or MSBs, money services businesses, to expand the definition of money transmitter for even developers or people who don't take custody of funds? And I'm not even just talking about people who are potentially, let's say, one of three multi-sig holders in the case of CASA or others, but in the case of someone who might just facilitate a transaction, for example. That's a pretty common broad phrasing
What
that's
does that
used.
mean?
Exactly. So that's, I think the main concern, I think, of a lot of Monero community members is, what does facilitate a transaction mean? So what efforts, the question is, what efforts have been made in the United States and in other jurisdictions to expand the definition of what is money transmission, of what needs to be a registered VASP, and does it cover developers? How do we make sure it does not cover developers of the Monero protocol, for example?
He's writing a book again. So how many of you know what FATF is? Financial Action Task Force, which is a body, supranational. Intergovernmental, thank you. Made up of 34, 35 countries, plus some regional organizations representing additional countries. All in all, I think there's, I did this recently, I put it in a book chapter. I forget how many countries have actually bought into sort of the FATF standards.
Over 100.
Over 100. I wanted to say 180, but that's
jurisdictions, not just countries. So the Vatican, territories, right. Palestine.
But that doesn't include the U.S. states. So that the U.S. is one jurisdiction. But this is a group that has been at it for now 25, 30 years, working on putting together some basic standards for anti-money laundering compliance, to try to push across the globe sort of a standard for dealing with, bad actors. And bad actors in all sorts of forms, from child pornographers to human trafficking and so on. And it creates standards, but it doesn't actually make rules and enforce rules, but that's a loaded question too. But what it has done is it's pushed out standards for countries to adopt. Now, the critical piece to understand about all of this is that the US really was instrumental in setting up FATF, and for years provided all the staffing for FATF. And still today, you can see what the US does is it uses FATF as a little bit of the canary in the mine shack to sort of put an idea out there and sort of seed it and get other people to come behind it. And then the US policymakers, who know that the US laws are lagging where they want to be, then use what's happening internationally and say, oh, we now have to do it here. And that's very relevant to what's going on in the crypto space. So you have to understand that perspective. FATF doesn't make the rules and enforce the rules. And so what's happening in Europe, so we do see this happening across the world now. The countries are in a real rush across the globe to put regulation around cryptocurrencies, around digital assets. And it's at a level that I've never seen. I've been doing this work for a lot of years now. I've never seen it this kind of pace. So if you want to.
So I forgot the question, but feel free to remind me on that. But just to say, well, no, remind me first.
Sure. So it was, how do we prevent developers and people who are non-custodians, for example, from being covered under expanded definitions of VASP or MSBs?
Yeah. So one of the things that the Financial Action Task Force, being a non-enforcing standard-setting body, did is essentially allow for an annual revisit to the digital asset guidance that they issue. And they purposefully, being an intergovernmental body that also is very diplomatic in its interactions and needing to dilute language to a consensus across different countries and so on, one of the things that they did is they almost purposefully left a lot of the definitional work around sort of DeFi and things like and NFTs and DAOs vague in the first instance in order to see where the industry is going. Over the years, as we've been revisiting the FATF guidelines and guidance, the way they sort of inform annually is by conducting a survey of jurisdictions, a survey of countries, and saying, what are you seeing in the development of this space? Where are your risks? Where are your opportunities? And then taking that information to inform their guidance. And so one of the things that I'm always worried about is that it's always the same countries that are sharing their experiences, developed countries that come in, and therefore we're seeing a very lopsided approach to which which definitions get embraced or not. Every jurisdiction has the opportunity to shape their own legislation and their own definitions. I think in the US, we know that this is a live issue. It's being discussed as we speak. Everybody's sort of, you've got crypto lobbyists kind of gunning for this. You've got a lot of money pouring in to Washington to try and have these discussions. I think it's still almost a victim of the educational learning curve. We shouldn't be making these decisions now because there's still a lot of crypto learning curve before we can start codifying legislation around these kind of topics. And tangentially related is sort of the regulatory brain drain because everybody's coming to work in crypto. So the folks that need to be making these decisions are leaving, coming to crypto. So now we have to re-educate everybody again. So it's becoming a bit of a challenge to pass the kind of regulations that that are sensible. I'll stop.
So, Justin, I know we still haven't answered your question, but we said there was a lot to unpack
avoiding it
there.
Beautifully. I think we're doing really well.
Because I want to get to this because I've done a lot of tweeting on this issue. The question is, can you hold a developer responsible for compliance in this area? And let's just say it's a fine line. And as with everything, you look at the facts and circumstances of what that developer is doing. So really the law sort of covers it now. It's not the question is whether we're going to actually put some hard language in there. But if the Department of Justice sees something they don't like, they've got enough latitude in the existing laws in the United States to go after that. And that means developers. So if you're a developer who solely writes code and you write code very innocently and it ends up getting used by somebody for bad purposes, you probably are not going to be held to be liable for that. However, if you write the code with the intent of it being used for a purpose that is contrary to law, you are going to be much more at risk and possibly, at the very least, be considered to be aiding and abetting in a criminal activity, if not actually facilitating it. So that's the thing that you have to play to. I was talking earlier that I got banned from the Bitcoin conference in 2014 because I got up on stage like this and I said, I don't care if you're a money service business or not. In the United States, the money laundering, the criminal statutes apply. And so you're going to be held responsible for your behavior regardless of whether you fit in under some definition.
Sure. I mean, in the United States, though, for example, when Elizabeth Warren put forth her proposal in covering—
Which one?
The one in relation to covering potentially developers under sanctions laws, for example. Sure, you're right that intent is needed for the criminal prosecution, but intent is not needed for civil prosecution. So developers could still be liable. Let's say I work for Cake Wallet. Cake Wallet publishes this application, and then it uses broad language in terms of how the application could facilitate some sort of payment. Maybe I would send a cryptocurrency address through an open source chat application, for example, just to cast a broad net. So, someone could, in theory, be civilly liable or charged under the civil section of the sanctions law to say, hey, that you helped, facilitated the evading of sanctions, even unintentionally, and you could be finable at certainly a lower threshold, but still it's, the tune of tens of thousands of dollars potentially. So that does worry some people, and as developers, they have no intent. They're writing open source code that gets pushed out, and they could still be civilly liable under some of these proposed regulations, even if it's not directly enforced against the people who are presumably good actors.
So a few years ago, we saw a very similar situation. We saw compliance officers who work in banks whose responsibility it was to mitigate the risks and kind of put in controls and safeguards. And when those failed, they found themselves to be almost criminally and civilly liable for the failures that happened under their watch. Now, one could argue the compliance officer can't be responsible for all of this because, they can sort of be responsible for the safeguards and controls that they oversee, but they can't oversee all of the accounts, individually, but they're still held liable. And I think the question comes down to, who do you sue and how do you get to them? But the broader piece I think that's important here is that what compliance officers were told is that if you evidence and keep a record trail of intent, you intended to safeguard, you intended to put the controls, and you did put all the controls, and you evidence trail that throughout. And there's a reason that compliance officers now really want to make sure that everything is recorded, that there's logs accounting for everything, because if they were to get sued, they have a full ledger of intent, and they can demonstrate that in a court, and a court will then be open to understanding, well, the intention was pure. And I think, needing to prove intention is what it comes down to. And compliance officers found that, that's how they handle that.
But I think your issue is a little bit different in that you're talking about the people writing the code. And yeah, I agree with you, and it's a good example. But, what do you do? And I think this goes back to your comment earlier about what are we about? And it's sort of what are our basic values? And I think what policymakers in the United States and around the world are doing right now are trying to are struggling, I should not try, they're struggling and trying to find a way to address this new technology and how to embed the values that we've already established. And so if it means going to the coder and saying, hey, coder, as you're putting something together, it may be really cool and it may work really well, but you know what? You need to think about how you can prevent the bad guys from abusing it. And so that is a bit of a change, but I can tell you, I know because I had conversations going back to sort of the 2014 timeframe again, when a lot of things were sort of evolving with federal prosecutors who were seriously considering, and I won't name names, but I know who they were, people who were involved with some, should we say, privacy enhancing coins in those days, that they were ready to bring action against them under the money laundering and bring criminal charges.
Okay, yeah, I would love to dive into the case probably some other time because it's a short panel, but it's always interesting to see that, Carol, you have such a good background in the cases, especially before cryptocurrencies became mainstream, because you were so involved on digital payments beforehand. So that perspective.
2014 was digital. It was crypto.
Okay, I mean, even so,
it was definitely crypto.
Even so, you're starting with examples from like 2007 or so in relation to the digital gold, digital gold. So it certainly is useful context for framing the regulatory approach as these assets evolve. So it's certainly very useful. I mean, I think that still leaves some unease among Monero developers, but go ahead.
Okay, so how many of you are familiar with Liberty Reserve? Okay, it was taken down by the government in 2013. I'm sorry? I didn't hear that. Oh, that's another. That's another. No, not that. He had the dollar, but this is Liberty Reserve, which was well, that's right, and that's what the government said. This was clearly a criminal operation. So they took it down in 2013, killed the website, and there were a number of countries that were involved in the action. They indicted the CEO. They indicted, several of the top brass, but they indicted the CTO, and they also indicted the manager of IT. And what they said is that the CTO and the manager of IT knew at the time that they were developing something that was going to be used by criminals. And those guys both went to jail.
Okay, yeah, that would be very interesting to look into the specific cases for that. I think that'd be very interesting for people to read, and I encourage everyone to take a look at the full case there and on how the actual criminal prosecutions went through.
Can I also make a note? I get impassioned on this because I usually end up on the side of helping people clean up afterwards, and I see how lives get destroyed and so on. So I have a certain passion of wanting to keep people out of trouble ahead of time.
Mm-hmm. I mean, that's definitely good. That's certainly why people, I assume, retain your services. So I'm going to switch the conversation quite a bit to KYC. So a lot of people in the Monero community, and I would say a shocking amount too as well, and even the Bitcoin community, the cryptocurrency community, do not like to use KYC services. They will go out of their way in order to use Bitcoin ATMs where they, let's say, would have a lighter KYC touch, especially for amounts under $3,000, where they might just need a phone number, for example. It's pretty common for people to recommend not using a KYC service where applicable. So I guess let's start with an initial question as it relates to KYC services. Do both of you believe that in the United States, it should be required to provide an ID in order to purchase from USD $1 of XMR?
So I think that assumes that an ID equals know your customer, which I don't agree with. I think know your customer as a concept has evolved where you need to know your entity, you need to know your business, you need to know your contract, your executable contract, your smart contract. So I don't agree that an ID equals KYC. So I'm not sure where that leaves me on your question.
Okay, so would it be accurate to say potentially through other means of verifying a customer would be appropriate in cases like those?
I think customer verification is appropriate. I don't know that the threshold needs to be $1.
Okay.
Okay, a couple points here. And one is that we don't, and for MSBs, which is where a lot of things get regulated in this arena, we don't have a specific requirement for any identification until you hit $3,000. It's risk-based, so it's left up to the entity to make the decision as to what they think they need to collect in order to be able to comply with the law. So going back to what I said earlier, and I could give you some examples of, what some of the of what complying with the law is or where you cross over the line, but I won't take the time now. But just suffice it to say that you assess what your risks are that you're going to be doing business with somebody that you shouldn't be doing business with. Could be a person on the sanctions list, but it could be somebody who's been involved, has a history of doing money laundering or maybe mail fraud or whatever it is. But how well do you know your customer? And so it's up to the individual organization at this point in time to make the decision between $0 and $3,000 what you need to collect. Now, if you're a bank, the bank has to collect it from $1. As soon as somebody walks in the door and wants to open an account, they have to get the information and they have to verify it. It's not just enough to get the information, but it has to be verified. I don't know how many of you know that Kraken and BitMEX, got hit with fairly substantial, well, Kraken not as substantial as BitMEX enforcement action recently, where they were brought in under a different regime, not the money service business regime, but they were said they had to be an FCM, a futures commission merchant. And that brought them under the same rules that banks apply, or apply to banks, which mean they have to collect from $1. So that's sort of a starting point. Two is, can you do it by means other than, I guess, actual collection of the data? Are there other ways to do it? And, the banks have worked out ways for credit card applicants and so on over the years. So if you can get enough information from other sources that will give you enough information to know who you're doing business with, that could be sufficient. Now, having said that, I don't know if they're in the audience, but there are two gentlemen here tonight who are actually developing a really interesting product for KYC, where on your wallet, or using your phone as your wallet, you'll be able to establish your own credentials and identification and verification, and then share it with whomever, or share as much of that information with whomever you can, which is going to streamline considerably your time in line, as well as the entity's time to process the KYC information. So it's something to watch out for, some really interesting developments coming.
So I think there's multiple platforms right now that are all kind of vying for, owning the KYC space, owning the know your customer space, controlling for credentials. I mean, there's all these issues around, where's this data kept? What are you doing with it? How's it, all the usual handling issues with it. I'm just sort of suggesting that the concept of KYC, as banks are pursuing it and now asking cryptos to conduct KYC the way that banks are doing it, is just not working generally. So that concept needs to be shaped out to be a bit more progressive, because a history of potential money laundering or fraud or whatever it is doesn't seem to be mitigating the criminality that's actually happening within banks and otherwise. And I think too, sure, the risk-based approach is great, but I can go on a dark market and buy myself a new set of credentials and, get away with pretty much anything. So I guess that's just not working in my view. And I'm always trying to think, so how do we reshape the concept, particularly when you have an executable contract? What happens then? How do you verify its identity? And some of the things that we're seeing regulators discuss is really put the onus on the technology to say, know your identity, know your contract, know your business. And I just think that whole issue is massive. And I'm very passionate about this because I spent years working in Somalia and the Horn of Africa when they didn't have IDs. They had sort of, their address was the boulder behind the tree next to the hut, and they would bring an elder clansman to verify their identity. And so I feel that there's a fundamentally privileged piece to say, bring your ID, bring your passport, prove who you are, that really pushes out of the economy a massive swatch of the population. And I think that just goes to financial exclusion. So I agree with this need of identifying a customer. It doesn't need to be biometrics. It doesn't need to be a state issued ID, but it needs to be sophisticated enough to be inclusive, and it needs to appease regulators who know that they could eventually somehow get to the person that they would need to get and reconcile online and offline identity. But KYC has not progressed to address what a digital economy in a globalized world requires.
I want to quickly just step in and just voter ID laws, for example, is a very political topic in many states, and many individuals consider requiring an ID to vote, for example, to be discriminatory. So, I understand that you can make a pretty reasonable argument right now that cryptocurrencies are not like essential access for many individuals to the economy. But as we're talking broadly about just access to banking accounts, access to any sort of online financial access system, requiring an ID for that would probably, or at least in my view, would certainly isolate a very large portion of even the United States population.
Well, and we've certainly been through those issues. So post 9/11, when the Patriot Act was passed, and the banks had to start to do more serious customer identification, undocumented workers were the number one hit taken because they didn't have the documents to walk in and verify and to be verified for their identity check.
I think that's a really good point, that sometimes when we're imposing, especially on these lower limits, stricter AML requirements, we're often targeting the individuals who are like the most vulnerable.
Yeah, but the problem we have is that we've had this $3,000 threshold for many, many years, which actually, under the FATF guidelines, a lot of countries adopted $2,000, but now we're in the process of moving that down to at least $1,000, if not lower.
So my practical suggestion here, being very action oriented, is that the Financial Action Task Force is an AML intergovernmental body. They are focusing on setting standards for anti-money laundering, counterterrorism, finance. That conversation needs to go hand in hand with, for example, the Alliance of Financial Inclusion, who are central banks that are focusing on promoting inclusion, and then reconciling those two conversations, because the AML, and I'm an AML compliance professional, and I say this very, very clearly, AML cannot be the sole driver of the financial integrity concepts that we adopt and now apply to crypto, which is why I love the concept that we're trying to standardize global guidance via the FATF, but the FATF is an anti-money laundering body. And there is much more that needs to go into know your customer considerations, like inclusion, like exclusion, and this big vision of bringing in the underbanked, the debanked into the financial system and promoting accessibility, viewing it from an anti-money laundering perspective that will now define KYC, almost infuriates me. I'm going to calm down.
I think you make a good point, though, that in general, the FATF's role is to try and prevent financial crime worldwide,
sure.
right? And trying to set standards. And that is something that each jurisdiction needs to battle out what makes the most sense, weighing on much more factors than just preventing money laundering and terrorist finance.
Well, and I know we promised we weren't going to talk about the travel rule, and we're not going to, but in conversations around it, which has been a very hot button issue,
A long one.
are privacy considerations, so that you're requesting a lot of information from the customer to now, in these transactions that are happening globally, instantly. But how can you keep that? And you have to share that information across borders. And how do you keep that information appropriately private? And that's the challenge of our time.
Awesome. I think I'm going to move on to another question regarding non-custodial or unhosted wallets, so to speak, as some people like to define them. This is the idea that you have your own keys, your own cryptocurrency. You're able to independently initiate blockchain spends, for example, instead of relying on a third party or a financial institution to do them for you. So there's certainly, it's a hot topic among regulators to find ways to look at money coming in and out of unhosted wallets. There's different approaches. Some jurisdictions may move to require verification of wallets, for example, in Switzerland, or other jurisdictions may not really impose any restrictions on them at all, like the United States currently, although there are certainly discussions to do that. So a lot of people here are probably rightfully concerned as a result that there's a so-called war on non-custodial wallets. You saw, for example, with the recent passing of legislation, I honestly forget what country, I don't remember if it was the US or not, but they were worried that, a certain country banned unhosted wallets, for example, which is not a real accurate assessment of the situation, but it was still what raised alarm and I think speaks to people's concerns regarding the ability for people to use unhosted wallets. So my question is, how do you feel that the United States and other governments will try to approach individuals' ability to use unhosted wallets? Do you think it will be common in the next, let's say, 5 years for exchanges to only allow withdrawals to unhosted wallets with significant restrictions or not even allow them at all, and to try and pull everything on exchange? Or do you think that that governments will try to capture a lot of those flows so that they can document it?
So self-hosted wallets and this conversation of unhosted wallets is being discussed day in, day out in numerous forums, and there's a lot to unpack, and it's complicated and so on. The one thing I would always urge, and I say this in every forum that I speak in when we talk about this, is that the language we're using to discuss unhosted wallets and self-hosted wallets is very inflammatory, and it's extremely negative in terms of the way that the conversation is being, the words that we're choosing to use, quite literally, how we're talking about them. And there's been, if you're speaking about something with negative connotation, that sticks. And I think part of the challenge that we need to sort of realize is that unhosted wallets as a topic has been tainted with almost, punitive language from the get-go. It's that kid in the corner who keeps toppling everybody's Legos over, and we just can't shake it, that this is actually a nice kid. We need to talk to this kid. That analogy, I know. But the point is that we really need to bring down the language a bit from industry, from the regulatory side, and really talk building bridges. There needs to be a better conversation. Regulators are open to learning more about this. We as an industry, I feel, have a responsibility to share ways in which we see risks and opportunities with unhosted wallets. We need to talk about the financial inclusion element of them, but we also need to talk about the risks associated with them. And collectively, if there's the dream of a public-private partnership that needs to occur right now in the United States, it's for industry. And I know many of the crypto associations are working on this, is that industry and regulators should sit down together and say, let's talk about this and figure out how to do this, because this is a fundamental piece for the industry. I know for this community and many others that we simply just need to bring down the language, deflare it, and then talk about it.
So I'm somewhat with you, but I think there's, assumption is maybe the wrong word, but a built-in explanation, sort of that regulators, as they're sitting down and determining what to do, there's sort of an illusion of control, though, that they have the ability to specifically prevent people from using cryptocurrency self-hosted wallets if they just don't allow them on exchanges, for example.
So let's go back to your comment about transparency when you opened up.
Yes, okay.
So the regulators in the US, at least, are already there. They figured it out a year and a half ago. And what they've done is and you've probably read about this, is that they've put a new requirement in place, first on exchanges, on entities that were regulated under the Bank Secrecy Act, so banks or exchanges, to report transactions of $10,000 of cryptocurrency of $10,000 or in the equivalent of $10,000 or more have to be reported to the U.S. government. Then, and this was the part of the hullabaloo, but a lot of people missed it because they were much more concerned about the tax provision in the legislation last August. But I said at the time, and again, I tweeted it out at the time, that the sleeper in there was the provision that would require any trade or business to report transactions of $10,000 or more in crypto.
Right, like similar to cash reporting.
So that's like the automobile dealer now does with cash and so on, but any trade or business. Now, they haven't extended it yet to individuals, but that could be where it goes next. And if you think about it, when we cross a border coming in or going out of the United States, we have to report whether we have $10,000 in our wallet. It's a little bit more difficult. We've dealt with this in the prepaid space, prepaid cards for a long time. How do you report that information? So I think the good news is that in prepaids, I don't even know if they've still gotten that solution fully in place. So it may take, another 15 years for us to get this solution in place for crypto.
And just to also come back to answering the question, but also, caveating a little bit, when you look forward as, what is the various U.S. administration going to be doing around unhosted wallets? I think there needs to be an avoidance of making this a partisan, it's a Republican Democrat issue, because it shouldn't be something that is now going to be entrenched in a political discussion, because the initial conversation around this started with Secretary Mnuchin under the Trump administration. It was shelved and now it's back. And so we just need to make sure that this doesn't become a key for, political jockeying. And also, I caution ourselves as industry to not think of regulators as a monolithic entity. Regulators are not, one entity. They don't share a view. There's multiple different, layers within any regulator. The U.S. regulatory space is obviously an acronym soup and fragmented purposefully almost between a variety of institutions. So it's numerous, actors that are influencing in this space. So again, I think as an industry, we have a responsibility to educate all those different players and bring everybody to the table.
And the crypto space has been doing a pretty good job of education. How many of you watched Janet Yellen, Secretary of the Treasury's press conference or speech today? How many of you saw it?
I read the transcript.
Okay, but you need to go watch it. I've been saying for years that, hey, crypto is important, people. You need to pay attention to it. And I've said it to the Fed, and I've said it to people at Treasury and so on. First time ever you've had a speech like that given by the Treasury Secretary. Now, I guess Mnuchin sort of drug Bitcoin through the dirt about it a couple of years ago, but that was another loaded one. But that was unprecedented. And her comments, she was up there lecturing people on what cryptocurrencies were. And as soon as I heard that, I knew, hey, this is not going to go down so badly, because it's showing a recognition that this is stuff that's here to stay. And I think that's the big move that the government has moved from being totally anti. I shouldn't say totally yet, but there's been a shift, and it's a recognition that there is good in the technology, there is good in what's going on, and as she said today, responsible innovation and appropriate guardrails, amongst other things. But those were her two major points.
Excellent. So I have time for one more question, and then I think we probably won't take audience questions. You can just chat afterwards for those so that we can move on with the rest of the event. But one thing that we see in the compliance space, especially as it relates to, I guess, creating, well, both in the compliance space in terms of exchanges setting their own compliance policies, but also in terms of regulators setting policy in relation to cryptocurrencies. Monero is often used as the foil. They'll usually say privacy coins, but they really usually do mean Monero in that sense. So how do we incorporate Monero, at least in your opinion, how do we better incorporate Monero in those discussions that is different than us just sort of acting as the foil for the rest of the cryptocurrency to prop their arm on and say, hey, we're an exchange. We are being compliant, and one of the ways that we are compliant is that our policy says that we don't list any privacy coins, for example.
So
that's actually a very common thing for people to say, for example.
When we say foil, we mean punching bag?
Yeah, punching bag. So they'll say, hey, we're compliant because of all these reasons, and also because we don't support privacy coins as our policy, for example.
I go far further than the punching bag and say the target for shooting practice.
We literally, I feel that we are, and most conversations, at least the ones where they remember that we exist. So in what way, how do you think that Monero will best move past that? Because sadly, we haven't seen many other large cryptocurrencies adopt widespread privacy. I mean, you have projects like Zcash, projects like Bitcoin that have optional privacy with some uptake ultimately, but it's significantly limited by comparison. Even with Litecoin moving to Mimblewimble, it's still not the same, and still the level of uptake is to be determined, for example.
I guess my short answer, having watched it for several years now, is take a look at the Zcash example and what kind of structure they set up with the electric company and the kind of effort that the electric company has taken around the globe to have conversations with regulators, with policymakers, to get them more comfortable. Now, not that Zcash hasn't had its issues as well, but it's not held in quite the same, it's not quite the same mindset. And then the other problem is that from a practical standpoint, if you look at what's been going on in the ransomware arena, what they're finding at the end of the trail is Monero. And that's what shapes views. That's what happened with eGold back in the mid-2000s, is that when time and time again, when law enforcement went in investigations, it was eGold that they were finding that was being used to transact on the internet.
Yeah, I mean, I would just add to that Monero has a reputational problem that is based on the information that comes out around where is Monero used, who's adopting it, how is it being used. One of the things that I value is Monero values as well. And when I speak to regulators, it's often a very difficult conversation because you want to bring in the licit use cases of Monero and demonstrate the importance of and the economic contribution that Monero can have. But it's almost, again, this there's a negative narrative that's associated with the ransomware conversations, with the security-driven conversation. So it's almost like a need to desecuritize the Monero conversation, and that's not something that we can do given the sort of overwhelming evidence base that Monero is used illicitly. How do you counteract that, and how do you have that conversation? In my mind, it's always like, well, we need to write a white paper. There needs to be a white paper, right? We need to have a white paper, then we need to go lobby, then we need to go have this movement around it. Let's do it. But I think I say we as sort of like a crypto community that's also looking at the importance of Monero-like traits for crypto, to say we really need to address the security, anti-money laundering, sanctions concerns head on and provide real answers that help mitigate the real concerns that come with this currency being misused for illicit purposes. And until we come up with non-othering argumentation, oh, they're doing it too, like that doesn't help. So we need to find like true risk-based controls to mitigate and demonstrate the mitigation strategy. I just see this continuing to be like an ongoing struggle, because regulators need to be brought to a level of comfort that at the moment is just not there. So how do we do that? And these are the conversations that I would love to have with everybody in this room. This is typically not the space that I'm at. I'm usually more with like regulators and compliance professionals. And they're like, let's delist this this coins. And I want to bring these ideas to say, no, we can do this differently. But I'm personally, I don't know how. So let's do it as a collective. It seems, crowdsource ideas on that.
So you could change the name from Darkcoin to Dash.
Yeah, that works. I mean, even so, like, for example, I know you mentioned the ECC, for example, but ironically, at least in my opinion, they've used Monero as a foil as well. Be like, oh, well, we're more like optionally transparent, even though Monero also has optional transparency through the view key, for example. Oh, and Dash is still thrown under the bus despite them having worse mixing options than Bitcoin, for example. So it is very much a perception implemented policy, in my opinion, which I feel is odd. It's not where the real risks are. It's more of like a perception of risks.
Can I add one more quick point that actually counters that, is the cybersecurity concern. There is a real and valid, as far as I understand it, happy to be corrected, cybersecurity concerns around Monero. And I think that's something that needs to be, again, addressed, points of vulnerability. And then one of the things that with other cryptos is very comforting to regulators is that if there's a massive rug pull or massive fraud conducted, you can trace those funds, recover, give it back. What do you do in the case of Monero? How do you do customer protection, investor protection? Who do I go and call if $100,000 of mine have disappeared, Monero of mine has disappeared, it just goes away. And so I think we need to, again, be addressing these real practical questions of what are the protections that allow me to maybe recover my money, to avoid the single points of failures that there are in the cybersecurity infrastructure around Monero. And those are really exciting questions to address because it means, we're living in this moment to do that, but we need to tackle them.
Awesome. Okay, well, thank you so much, Liat and Carol. I really appreciate you coming today to Monerotopia. Probably, like you said, a different crowd than you normally talk to. But I think it was very important for people to hear this perspective. I think it's important for you to keep Monero in mind in a lot of the discussions that you're having with regulators. So we appreciate the opportunity to get to the top of your mind for a lot of these discussions.
Thank you. Thank you very much. Thank you.